Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
We've seen ASX 200 that's seeing a decline of around 0.8% this morning.
But the pace of FII selling has stabilized a little bit.
Today, EV in the passenger vehicle is just below 2%. And I feel we are all gaining towards 30% in 2030.
A 0.5% cut, 22,800, 22,780, so around there.
The foreign flows, I suspect, we should assume for the time being it's not coming back in a big hurry.
United States will have to save more and consume less. That actually could diminish exceptionalism.
But what's actually transpired in the last hour has been a very, very strong recovery that we've seen from the intraday dose.
Indian economy today has an environment in which investments are also yielding good returns and profit booking is also happening.
Well, it is indeed a decent recovery from the lows as we are tracking markets. This is closing bell, last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Surabhi and Nigel. Guys, good afternoon.
Hi, afternoon, folks. And indeed, the bulls have fought back hard from the kind of deep opening gashes and cuts that we had in the morning, including in the mid-cap part of the market. There's a big comeback. In fact, the mid-cap index has flattened out. So, resilience and putting up a real brave frontier.
Well, that's right. And in fact, if someone had told you that getting into the final hour of trade, the Nifty will be down 20 points and you'll have 800 stocks that are advancing, I think the bulls would have grabbed it. So fairly okay trading session. Let's see whether or not we can build on and in the final 60 minutes or so. But today's a decent session. I think the first couple of hours are tricky because those margin calls get triggered. Yeah. And then we see some kind of stability. So it appears that's what's played out today as well.
Absolutely. I think the first day after many sessions where it's not looking like mayhem when we start 2:30, right? We've actually started the show early because there has been at least a few times in the last 10 days because markets have been panicky. 10:1 declines to advances, mid-cap indices down 3-4%. None of that today. And I think it's the first after many days. So that's the Nifty, a very, very decent recovery from the lows. Advanced decline is still negative, even though, that recovery is very much there on mid and small caps as well. But so far, so good as far as these individual stocks and sectors, etc. are concerned. So it'll be good to get a positive close. I think that'll be great news. 8 days now, the market's been selling off. So a positive close, that's the first. That's the first step, and it'll have to be a process, slow building blocks, and you're not expecting any big recovery, but just the market stabilizing a little bit, stopping to fall, and then we'll see if it wants to really build on to it. And of course, then the daily, actually first hourly moving averages will come into focus, the 40 hourly exponential on both the Nifty and the Bank Nifty, and then you'll start talking about 10-day, 20-day averages and that kind of thing. But well, let's not get ahead of ourselves and take it one day at a time, actually, and every hour at a time. Nifty Bank is actually in the green, and the Nifty, for all practical purposes, is, I think we saw some green early on, and we are barely in the red. So it's a good day and a good session. So hopefully we'll continue to build on that, guys.
Okay, so on the Nifty, let's actually bring up the contribution chart because it's absolutely even Steven. It's split down the middle between the red and the green side of it right now. And an equal number of heavyweights sort of balancing out or cancelling out each other, so to speak. On the upside, HDFC Bank has been a big pillar for the market. And there you go, it's contributing 32% or 32 points. On the upside, there's IndusInd Bank that's doing well, and there's Reliance, which has been on the positive side of the screen. But then stocks like ICICI Bank are undoing a bit of that good work. Some of the IT names, stocks like Bharti, they're on the weaker side. And M&M has been a story since morning. Let's pull up the M&M intraday chart. Though the large part of the market has recovered very smartly, M&M is still feeling the heat, down about 4%. You could argue that the stock has had a fantastic run. It has been the best performer of 2024 among the better performers of 2025 as well. And the EV data was out, and those numbers are not bad. They've announced more than 30,000 bookings in the first couple of days. But anyway, for what it's worth, there is profit taking at higher levels on that stock, and that's persisting. Other names include Wipro along with Infosys, and ICICI is not alone. Look at Axis Bank as well on the lower side, TCS, ITC, Kotak Mahindra Bank. These are the ones to watch in terms of the large caps, which are still a little iffy. But Nigel, I guess mid caps, and heartening to see the kind of recovery after the opening cuts.
Well, that's right. And I think the other point to note is that the US markets are shut today, right?
Yeah.
Because of President's Day. So the FI participation will be relatively less. So that could be another factor of play as well. So maybe they're, they've been sellers and maybe all of them are not there today. So we just need to take that on board as well. But otherwise, select mid-cap stocks, they've seen a big recovery from the day's low. So don't lose heart. Don't lose sight of the screen. There are plenty of opportunities out there. Just to name a couple of stocks that have recovered. NLC India, the stock recall was down. That's seen a big recovery from the day's low. So that should come up for you. Even Reliance Infra, it was reacting to its numbers, I think so. And that one was down close to 6-7%. But that's one of the top gainers just in these 30 minutes or so. So I think you should get an intraday chart up for you on the screen. Midesh Thakkar is back with us. Midesh, we have been saying here in the studio that it's not such a bad day. It's come to that point of time, right? When the Nifty doesn't crack, at least it's not so bad, because normally we're used to getting to the final hour of trade where the bull's just barely holding on. Your take?
Yeah. So Nigel, I think once again, somehow, and I really wonder how the level of 22,800 for the Nifty kind of held on. Very difficult in the short term, but we did get to a fresh intraday low, but the closing looks like will be about 22,800, though if we still have 55 minutes and things can change dramatically, but it does look like that will possibly not decline much. So holding on to this level on a closing basis is important, but as I've been saying, despite the fact that we've repeatedly bounced back from here and we have held on to this level, there is no strong sign of a reversal as yet. So not going aggressively long here. Still trading with stock-specific bias. In fact, Ashok Leyland is something which is on my buy list. That's a buy with a stop at about levels of 215 for targets of 235. And the other one is a buy on UPL, which I would recommend buying with a stop below 618 for targets of 650.
Okay, all right. Thanks a lot for that, Mitesh. We'll keep an eye out on a couple of those names. By the way, from the broader markets, actually, quite a few stocks have seen a recovery. Balrampur, Chini, pull it up for you. Max Healthcare is the other one as well. So some of those frontline names, they've seen a good recovery in the last few minutes as well. So both of them at the high point of the day. But the top loser on the Nifty today is Mahindra and Mahindra. Remember, they launched their EV and they got a fairly good response. But maybe the street wanted more. Sudarshan joins in to break it down for us. Sudarshan?
So as far as the booking data is concerned, there is nothing to complain, as company has disclosed that it has received bookings for around 30,200 units for two EVs that company had launched recently. That was XEV9E and BE6. And company said total booking value is around rupees 8,500 crore. And most of the brokerages are too positive on the stock, with Citi has a buy call with a target of rupees around 3,700 per share. It says absolute volumes of these two electric vehicles are much lower than some of the recently that product that company had launched, but it's comparing with the ICE products against current EVs against ICE products that company had launched in last few months. Also, it says need to see how the EV facility ramps up and what is the cancellation rate. Nomura 2 is a buy call and target is around rupees 3,700 per share. It says it's an impressive start for BEVs with 30,000 bookings, and company has received 56% and 44% bookings for 9E and BE6, and 30,000 order book is a very strong start. GS2 has a buy call and target is 3,800 per share. It says 30,000 bookings to imply 8% incremental SUV volumes for FY26, and BE6 and XEV9E models to collectively contribute 8% and 18% to FY26 SUV volumes. Elara 2 maintains positive stance. It says 30,179 bookings seem to a good quarter in our view, and strong demand and new launches will be key to achieve FY27 monthly run rate, that is 8,000 to 9,000 units. So booking data is good, but stock is under pressure. So going forward, what exactly we need to see? What if there is any major cancellation rate for these two EVs that company has launched recently?
Okay, all right. Got it. Thanks very much, Sudarshan, for the latest on Mahindra and Mahindra. Let's open up the conversation. We have Dipan Mehta joining us on the show this afternoon. Dipan, always great to have you on. Before we talk about overall markets and whether we've seen the worst of it or not, specific word on Mahindra and Mahindra. It's been such a good wealth creator, right, for the last several years now for investors. What do you make of this big decline today?
Yes, Subhi, good afternoon and thank you for having me on your show. See, I haven't heard anything negative in Mahindra Mahindra. In fact, as you said, 30,000 plus booking and the cars look just fantastic. Absolutely. Even the ad campaign has been received very well. So I'm a bit surprised at this correction. But amongst all the four-wheeler companies, I think Mahindra Mahindra remains our favorite as a measure of disclosure. We and our clients are invested in it. The reason for that is that it continues to grow and maintain its market share in the SUV. And amongst all the players in India, I think its EV strategy is amongst the best. And the models also which they have come out with are very impressive. So I'm a bit surprised, but such corrections, in my opinion, are good opportunities to get into M&M also. And I think the farm equipment division also has done pretty well, and that's got much higher margins. And when that starts to do well, we see really a fabulous earnings growth in M&M as we have seen for the past couple of quarters. So view is positive on M&M. I'm not sure what this correction is all about, but could be an opportunity for people who want to increase exposure to the auto segment.
Oh, okay, all right. Dipan got that. Thanks for that input on Mahindra and Mahindra. We have to actually talk about a lot of other stocks as well, including Kotak Mahindra Bank, because this is a big exclusive that we got today. RBI, of course, has lifted its supervisory restrictions on Kotak Mahindra Bank. And earlier, Shireen was in conversation with the bank's MD and CEO, Ashok Vaswani, to talk about this, as well as a whole range of issues, talking about the bank's growth strategy in this uncertain environment. Take a look.
We're going to launch a complete brand repositioning campaign, which I'm really excited about. That should hopefully happen before month end, where we start presenting Kotak as the go-to financial services organization for the aspirational Indian, right? And that's what we stand for. And for the first time, we're going to bring all the group companies and everything under one kind of Kotak brand. We are also going to relaunch our entire 811 proposition. The 811 proposition has been completely reworked. Earlier on, it was really about just getting customers with a payment kind of account. But now, during the embargo, the team has worked to make it a complete set of products and services for the core Indian customer. The new 811 app is looking fantastic, and the kind of customer engagement we're getting on the 811 app is a multiple of what we were getting on our old app. We kind of picked up that things are getting difficult pretty early. Pretty much January of last year we picked up, and therefore we kind of slowed down things. So obviously our exposure and our loan book has come down quite dramatically. We are seeing, it playing out in different states at different points in time, and we will continue to see an elevated losses at least, I think, for the next quarter or two. And I'm hoping after that it kind of eases out. By then, a lot of our book also would have kind of rolled off, and I think that's common, and I think that's an industry issue that we're seeing through and through. So I suspect we will see the same level of pain, maybe even slightly more elevated for this quarter and next quarter.
Okay, all right. That was Mr. Vaswani there talking about the growth strategy ahead for Kotak Mahindra Bank. Deepan, how do you find the stock? If you were to buy a private bank and add it to the portfolio, medium-term portfolio, would Kotak get top billing, or would it still be with ICICI Bank, HDFC, IndusInd?
Well, I think I'd go with ICICI Bank. Amongst all the banks in the last several quarters, their numbers have been the best, and a lot of value being created in subsidiaries as well. And they've managed the growth rate at the same time, the NPA also pretty well. So, and it's a large bank, one of India's largest banks. And from that point of view, balance sheet quality has been exceptionally good. So I would go with ICICI Bank. Valuations also, I think, are reasonable compared to its peer group. But look, should be in the longer term, 3 to 5 year period, we should be getting underweight the entire banking sector. The competitive intensity is only increasing year after year, and the kind of advantage, technology and systems and HR advantage which the private sector banks had, that is now gradually dissipating, and a lot of public sector banks and new generation private sector banks have played catch up. So I'm not sure that these kind of numbers, net interest margins, are sustainable, and growth rates are going to get impacted because there's a lot of competition for secured loans. So short term looks good for banking sector, medium to long term, I think we should get cautious.
Right. Deepan, good afternoon. We discussed rate gain earlier. I think it's a stock which you perhaps have owned, if I'm not mistaken. I mean, I don't know if there's results or something 10% lower today. I don't know if you saw.
Oh, no, it's not. The results have already come. So it's not the results today, and it's there on my market watch list, and I'm scratching my head as to why is it down 10%? Is it an opportunity or what? Because I went through the con call transcripts as well as the presentation. I didn't find anything majorly negative in it. It's just that growth rates have come off, no doubt about that, because of base effect and because overall business getting matured. But I haven't heard anything negative. But certainly corrections like these are good opportunities. We're very positive on the travel and tourism space. This is one company which has a very unique business model, and we do have a lot of preference for platform businesses, and RateGain certainly is one of them. And it is highly scalable. They are going organically overseas as well. So maybe I'm missing something just now, which is why the stock has corrected. But if nothing adverse has come out, I think these levels and lower are good opportunities. Having said that, it's a company which we intend to invest in as a measure of disclosure.
Okay, all right. Deepan, what about metals? There are a couple of stocks in there. Hindalco, valuation-wise, looks okay. And the numbers actually were quite good. Any view on that one? And Vedanta is a special situation. Will you play it, because we've been waiting for the demerger. And I believe the creditors will meet, that's a normal course of action sometime this week itself. So, the stock has seen a sharp correction from the top. You have a softer dollar as well. The problem is on demand destruction. Otherwise, both these two stocks, they look decently placed. Your take?
See, Nigel, this entire sentiment in metals has got spoiled because of Trump tariffs. And the way he's gone about imposing tariffs on steel and aluminium, we can expect more dumping happening into India and globally also prices coming off a little bit. So there's just far too much uncertainty to get into any of the metal stocks, although they've corrected significantly. So I'd stay away from all of them. But Vedanta, especially not from the point of view that it's a metal company, but there's a major corporate action underway. And typically when such splits do happen and free shares are given to the shareholders, there's generally the value accretion is far more. So, as a simple arbitrage, you may buy Vedanta on a console basis just now, and on listing, I suspect you may get easily 5-10% higher if you were to sell off all the other listed companies as well. And eventually, I think it's a step in the right direction because the parent company will sell one or two of the businesses they're not interested in and further reduce their debt, and which will remove a huge amount of uncertainty within the existing listed companies. So I think that amongst the metal stocks, if you have to buy something, Vedanta seems to offer the best opportunity from that point of view. And as I said, it's this value unlocking play which is underway could easily give 5-10% instant appreciation once the companies which have been split get relisted.
Okay, all right, Deepan, thank you very much, for some of those inputs. We do have
Deepan,
questions.
at least the special situation got some interest in metals. It's been a long while since I heard you say anything good about the metals and cement space. So,
Nigel, what about my view, Nigel? Over the last several years or so being negative in metals, I think that has certainly helped me.
True that. True that, Deepan.
But I appreciate you're tracking the sector very closely. You're doing a great job at it as well. You're understanding it very well.
Thanks, Deepan.
You bought at the absolute bottom, and I don't think you've reached over there.
Okay, thanks, Deepan. It's been a while since I heard you say something positive about metals. Vedanta is the lucky one today.
Well, it's definitely caught Deepan's imagination, at least for the time being. We do have to take a quick break on that note. Deepan, thanks very much for that. We'll have to take a break. Come back on the other side. We'll have Herald Vanderlind of HSBC joining in with some perspective on the market.
Okay, welcome back. Markets in the flat zone, which is, of course, a very, very good outcome compared to the kind of days that we've had. Some flashes on Deepak Nitrite coming in from the conference call. and fourth quarter to be meaningfully better than the third quarter. Remember, Deepak Nitrite got smashed on Friday, so those statements, etc., we'll see how much of an impact that does make. Well, let's welcome in Harold van der Linde, is the head of Asia Equity Strategy at HSBC. Harold, good to have you with us here. Thank you very much. I mean, I think from the last time that we spoke to, today, it's a different market. The mood's changed, prices are down significantly. And all of this here in India, when globally things are just sort of, in many cases, on the mend. Look at what's happening in China. Look at what's happening with the Euro Stoxx 50 index. US is chugging along. But we've taken a hard knock. What's the mood like, and what are your thoughts now from here on?
Yeah, you're right. Last time we spoke, a flat market would not be good. And now, as you said earlier on, a flat market is as good as it gets these days. You're right. Sentiment is very different for Indian equities at the moment. And I think there's a couple of reasons for them. One is China is simply performing. People want to put money into China. That market is rallying at the moment. They need to get it somewhere. And what you therefore do is you sell large liquid positions elsewhere in other markets. So we see that the weakness that that India gets is something you see in other markets as well. Indonesia, Taiwan, and some of the other markets have not performed as strong as well. But there are also very specific Indian stories. And I think we know that earnings growth in India is slowing, but nobody knows to what extent. And what that means for the valuations attached to this market. So there's a sort of reset taking place. Lower earnings, lower multiples, and we're going to figure out how much lower we really go and how much, where the new earnings growth trend is going to show up. So that's something that markets are a bit touchy-feely about, and that's another reason, I think, why Indian equities have been, not being as strong as they were last year.
Harold, great to have you on the show this afternoon. Thanks for joining in. I guess you may agree that Indian equities have rarely been cheap. I don't think in our reporting careers we'll find too many phases where they say, oh, the Indian market is extremely attractive in terms of valuations or it's cheap. So at what point, now with this correction happening, at what point does India start looking attractive, or does it not? Because China, the US, these other markets are still doing very well.
Yeah, that's right. So if you look at the valuation, for example, vis-a-vis China, India is not super cheap yet. The problem is China has fallen so much and India has rallied so much that there's quite a substantial gap that's narrowing. But I wouldn't say, hey, India looks really cheap against China yet. It should not be that India should be at lower multiples than China, because China is not as profitable as India. So there should always be a gap. But the gap is still reasonably wide. What I think for us to say, hey, this is the time to go back into Indian equities, is really to look at momentum. If we see the China sort of rally falter, that's one thing. We're going to see also what happens globally with US bond yields. Are they moving higher? Are they moving lower? Over the last month or so, they've itched a little bit lower. But you could well have a situation whereby some of the tariffs that are being imposed are inflationary, that bond yield is going to go higher. So that would not be good for Indian equities either. And then I think it comes back to that earnings growth. We had last year a weak quarter, and everybody said, yeah, that's one quarter, it's just a one-off. But now we have another quarter of weaker results in India. It means there's something more going on. And we want to have some clearance on that. So if we have an idea of what the earnings growth is, the valuations stretch a little bit further, we know that bond yields are moving lower, then you can say, hey, this is probably a time to go into India. But I personally think that's not really the case at this particular time yet.
All right. Hi, Harold. Good afternoon and good to see you. But, the problem has been the FI selling. It's been relentless here in our Indian markets. And I think the holding in the Indian markets has come down to its lowest we've seen in more than 10 years. Do you think bulk of that reallocation has been done? Or do you think, they'll continue their selling ways? Because we have seen emerging market selling, but the selling here in India has been far more severe. Your take?
No, that's absolutely right. So I think probably, to be extremely frank, the bulk of that has taken place. We've seen some quite substantial outflows. And if you look at the positioning in India, a lot of people have actually reduced that quite considerably already. And don't forget, that actually happened in the middle of last year already, that actually foreigners started to reduce their positioning. It was that the locals were continuous to buy the market up at that particular time. So I think a lot of that is taking place, but it doesn't mean that they're coming back immediately. For them to really come back, I think that comes back to what I said earlier on. We need to have clearance on what the earnings growth is going to be. Probably at the moment, because we see a reallocation in the region towards Chinese equities. If that comes to an end, then that would help the other markets as well. As I mentioned earlier on, we've seen markets such as Indonesia also underperforming for the very simple reason that people just said, I want to be in China, so let's sell anything else I have. So it's these sort of things that I think foreign investors are really look at. The rally in China, the earnings pictures in India, and also direction of bond yields. If they would come down in the US because of some weak inflation numbers coming through, then that's a signal to look at emerging markets. And I think a lot of people feel still comfortable with owning India in the medium term. So it would be a market I would like to return back to.
You know, Harold, them coming back is a distance away. That's okay. As long as they stop this kind of selling that we have seen on a day-to-day basis, we're going to see at least $500 million, outflows from the Indian markets from the FIs. So
now, our expectations have also been reset lower. Forget about getting the inflows. If they just stop the outflows, I mean, that would help. No, but that's on a lighter note. Harold, expand on your point on China, because that's the new joker in the pack, right? Till now, it was only about US exceptionalism and how well US tech is doing and the US economy is great and all that. But suddenly, the last 4 weeks, look at what's happening to Hong Kong markets. I mean, up 15%. Is this just the deep-seek excitement, or is there something more that's really stirring in China?
I think there's something more going on in China. It's not that suddenly the picture economically or for companies has changed dramatically. I think there are positive things going on in China, but those really need another 2 years maybe to play out. I don't think that's really driving this rally now. The catalyst seems to have been DeepSeek, so that helps. The idea that, hey, maybe China is not actually that much behind on the technology front. But we also should not forget that the valuations are incredibly low in China. So you got a situation whereby your PEs are below 10 times. If your earnings growth is, say, 10, 15% this year in China, you suddenly have some positive news. You go from a PE from 10 to 11 times. That's not out of a stretch. Then you already get 20% upside from there. So these things can happen very quickly. And lastly, we should also not forget, in China itself, there's 22 trillion, not billion, but a T, 22 trillion US dollars in cash. Because Chinese households are not buying property because they've seen property prices falling. They're having money in deposits, but they're not making any particular money. They would love to put it somewhere else. They just don't have the confidence to do so. But if you got 22 trillion US dollars in cash, just imagine you say, okay, I got 22 trillion, so let's take 1 trillion, that's not that much, only 5% of what you own, and put that into equities. That's an enormous amount of money, right? We're talking about.
That's a tsunami.
Small shifts in sentiment can be very positive there.
That's a tsunami.
Absolutely.
So Harold, just to complete the point, from everything that you say, you seem fairly convinced on this China rally. I don't think you're seeing this as a flash in the pan, couple of days of move. Is it just a tactical trade, or is this a bigger move in China equities that's building?
I think it's too early to say if it's a bigger move. I do say that there are positive things happening in the Chinese market. It's got to do with consolidation and these sort of things. But as I said earlier, I don't think that's the key driver. For me, at the moment, this is just a sort of tactical adjustment in the market on the back of some good news and large amounts of cash in mainland China. And therefore, small kind of movements in confidence and adjustments in portfolio can have a real outsized impact on market performance there. But I think we've got to be careful in China because there's still a lot of the problems that we were talking about, say, 3 months ago in China are still there. And those have not necessarily gone away. They're dealing with it policy-wise and these sort of things, but that will take a lot of time. So the Chinese market can rally very quickly, but you've got to be a little bit careful as well in how long this is sustainable and can continue.
You know, Surbhi was saying that what has changed in China, right? And Harold was talking about the valuation. We'll just put up a graphic which clearly shows the valuations. This is prices as of Friday's close. So, I mean, today's price action is not too much. But just look at this. These are US top AI companies and Chinese top AI companies. This is 2025 P multiple. everything is 30 plus, except Alphabet on the US side. Look at the Chinese side. You got companies at 10, 11, 13 times. Meituan is 18. Tencent is about 17. So that is, of course, I mean, that's the valuation point. And this, by the way, after the rally we've seen. Start of the year, since the start of the year, the seven magnificent seven so-called US large companies, that index is up. I mean, an index comprised of those stocks is up 5%. And the Chinese the Hang Seng Tech Index is up 24%.
So now we'll have the magnificent Chinese 7.
So it's very interesting. So ChatGPT.
I'm just thinking from an India point of view, right? What you're saying is incredible data that you put up there, Prashant.
Yeah.
Really, in terms of the valuation reasons why people would be pouring into China right now.
Yeah. And they've got this impetus now because of DeepSeek. And I think it generally throws a spotlight on the fact that China, I mean, still people say it's the factory of the world. They're the lowest cost producer. That's the only advantage.
Yeah.
But something like a DeepSeek comes out and suddenly you're forced to acknowledge that maybe it's not just the cheapest
Labor
lowest
arbitrage,
cost,
yeah.
labor arbitrage.
There's more to it, yeah.
Soft tech, not just hard products, right? And they're doing well there as well. ChatGPT was the seminal moment, the turning point in the US when this entire AI rally began in the US. And, we've added some $13 trillion in market capitalization in the US, most of it coming through in those 7 names. That I think happened in November of 2022. Will DeepSeek be something not as big, but will it be? It's definitely turned out to be quite meaningful. But how much more is the question, really? But Harold, anything you'd be focused on here? A lot of consumer internet companies in India now in the listed space, and there'll be more coming. That's that's been an area of interest quite a bit over the last several months. Names like Zomato, etc. Anything on your radar?
Yeah, no, I mean, this is what we got to keep an open mind for, right? So China is basically sucking up the money in the region. That means that across the region you get a sell-off, and that means that there are also opportunities emerging. And maybe they're not going to turn around very quickly, but there will be stocks or sectors that they're going to look really attractive. And you say, hey, I want to pick that up at some particular point in time. It's very difficult to time the bottom of these markets, so you just pick them up as you go along. And what is really interesting in India is, of course, in the longer run, you still have a banking sector that looks considerably better now than, say, 10 years ago. You have discretionary consumer names that look pretty good. But one sector that we actually like a lot as well are some of the hospitals in India. Kind of a long-term interesting sort of story as well. Demand for healthcare picking up, people in the region. I was in Indonesia 2 weeks ago, and I met somebody I spoke with somebody who was considering to go to India for some of the healthcare issues that he needed to address with, instead of staying either in Indonesia or going to Malaysia or to Singapore, which is quite expensive, he said. So there are interesting sort of stories in India that will continue to do okay, whereby the valuations also look reasonably okay. Maybe the momentum is not with them at the moment, but those are the sort of companies that you need to have on your radar screen and say, okay, I pick them up in the knowledge that maybe, hey, in the next month or so, it might still be a struggle. You can't time these things very well, but you want to have them in your portfolio.
All right. So select hospitals, some discretionary consumption names as well, and I think select NBFCs as well, given that the RBI has started its rate, interest rate cut cycle. So I think those are the 3 broad areas. Is that correct, Harold?
Yeah, I would say those are the broader categories that we're looking at. And if I wanted to add one to it, it would probably be some of the IT companies. I mean, in the US, under cost pressure, you see that banks in particular are more willing to outsource on the software front to Indian IT companies. It gives you a bit of an inflation hedge as well. So that's something that I would be looking for as well. But those, the key broader sectors I'll be focusing on and building a bit more exposure to.
Okay, all right, Harold. Pleasure having you on the show. Thanks a lot for joining in and filling us in with your insight. For the time being, you believe that the Indian markets, maybe we need to see the earnings come back to life. Then, India will be the game in town yet again, like we saw close to around 12 months or so ago. For the time being, we slip into a short break. Come back. We'll continue to focus on markets. We'll also get you D-Street Chatter. Welcome back. At the high point of the day, the Nifty is up close to around 30 points. Yes, that is the high point of the day as we speak. And the Nifty Bank, now it's very, very close to the 20 DMA. So I think you'll want to pull up that chart of the Nifty Bank with the 20 DMA, moving gradually towards that mark. You'll want it to get past that particular level. Last week, we were unable actually to get past that. That said, as promised, let's get to D-Street chatter. Nimesh joins us, and I believe he's at the Kotak conference. Nimesh, first tell me, the coffee shop was very, very full. It was empty. What was it? Is there enough buzz out there with regard to interest?
Well, Nigel, there is clearly buzz today, and everybody seems to be having only one question as to when this pain in the mid-cap and small-cap will get over. So there's clear anxiety among a lot of investors whom I met as well at the sidelines, and everybody seems to be only discussing the carnage in the broader market names, especially mid-cap stocks. So clearly that's the top of the mind for most of the investors, Nigel. But again, from a market's point of view, it's a very sharp recovery today from intraday lows. I guess, again, finding support at around 22,800 levels. So that's a big level on the downside to watch out for from a near-term pullback. But from a flow perspective, I understand there is still sell-flows, especially in the large-cap names. The only difference, and if you remember, I said this on Friday as well, that for a change, there seems to be some nibbling happening in the broader market stocks that happened on Friday, and that's the case today as well. So again, there are a lot of individual broader market stocks which have been bid by the institutional investors. So that's from a flow perspective. I guess, as I said, support around 22,800 is very crucial to watch out for. But again, there are still a lot of broader market stocks, especially the breadth seems to be still quite weak, and there are still a lot of stocks which are locked down at 10% and 20% down circuit. So not everything has recovered from the lows in the broader market names, but there is selective nibbling happening by the largest institutions in the broader market stocks.
Okay, got it. Select nibbling is not bad, Ramesh, but tell us individual stocks, what are you picking up?
Yeah. So, to stick to the theme of, bit of buying in the broader market names today, I'll mention a couple of stocks where there was, delivery-based buying at institutional desk. Triveni Turbines, Rain Industries, NCC, and Maharashtra Seamless. These are the few names that clearly, stood out for me in terms of buy flows at larger FI desks today. So, as I said, some bit of buying is clearly visible in the broader market names. On the flip side, the couple of stocks which are under pressure today, largely on the back of sell-flows. PB Fintech, even after the recent correction from the highs, still under pressure, and there are sell-flows today. And Varun Beverages stands out in terms of very aggressive selling. So it looks like some larger FIs continue to be sellers in stocks like Varun Beverages, which are still expensive. The third name is Nalco. Within the PSU basket names today, this is one stock which is Nalco that stands out for me in terms of FI buying. So it looks like at lower levels, some bit of interest has emerged in PSU names as well, and that includes names like Nalco. And then last one is Indian Hotels. Even that stock has sharply recovered from the lows today, essentially because it looks like the selling is largely over. There was a large overhang of a large FI seller in that particular stock. Looks like that's got over today, and hence you've seen a bit of a recovery in Indian Hotels from the intraday lows.
Nimesh, aap aayi, bahar aayi. 40 points higher on the Nifty. Well, go on, Nimesh.
Prashant, honestly, Prashant, I was here and meeting a lot of investors. 1 or 2 days of pullback is pretty much given that it will come. We can't time as to when this will come, but the way that we are so oversold, technical levels, the PCI levels, one bit of pullback is pretty much possible and can happen. But the problem is, and we discussed this on Friday as well, Prashant. Now the mood has clearly changed from what to buy on dips. Now the question everybody is asking is, when can I sell in this upside? So as and when we see the markets pulling back a bit, you will see supply coming in and people look to exit just to book their losses and to cut their losses.
Okay, all right, Ramesh, thanks a lot for that. Well, a couple of things that you would like to see in this sort of a market is promoters coming in there and backing up their own stock, some kind of creeping acquisition. And one such stock is JSPL. I was looking at the BSE disclosures, and it didn't appear like there's any kind of inter-promoter activity. There appears there is fresh buying that we're seeing out there. The stock has seen a sharp correction from the 1,000 rupee mark to around 750 rupees odd. But the promoters have increased stake by around 0.7%. You'll say that's small, but at least there is some kind of support coming in there. That equates to nearly around 630 crores or thereabouts. So, the street is taken heart from that fact, and that has recovered from the low point of the day. The other one is Vedanta, as we mentioned earlier this morning as well, as one of the stocks to track would be Vedanta, because they have the creditors meet that will be there tomorrow. The dollar index has cooled off as well. And this is a direct play on metal. So that as well seen a good recovery from the low point of the day from around 400 rupees at around 415. Let's get Mitesh back into the conversation. Mitesh, what are the couple of buy or sell trades you have for us?
I have buy-side trades, Nigel. Ashok credit is something, which I've recommended earlier as well. Even now remains good, and for a BTSC also can be considered. Keep a stop at 221, look for a target of 228. And the other one is Hindalco. I think Nimesh was talking about Nalco. Hindalco also looks good. Hindalco is a BTSC. Keep a stop below levels of 606 and look for a target of 620 for tomorrow.
Well, indeed, and those are both the two stocks that we had highlighted today that you should keep an eye out on both these two. Vedanta, because you have that special situation. Hindalco, because the numbers look good, and the management clarified here on CNBC-TV18, whatever happens with Trump's tariffs, it'll be either neutral for Novelis or it'll be positive. So that could be another reason why, in fact, the stock has seen a good recovery from the low point of the day. Hindalco is the one that we're talking about now.
All right, let's just play out some sound bites now, right? We spoke with Victor Schwetz, head of global desk strategy at Macquarie Capital, about Trump tariffs, markets, US, everything. I mean, it's a voice that you don't hear very often on television. So here it is. Listen in. There's about 13 minutes to go for market closing. See you on the other side.
It's not totally clear what Donald Trump is trying to achieve, whether it's a negotiating tactic in order to get a slightly better deal for U.S. corporates, whether it's beating up and giving some meat to the base and ensure that the base feels that he is working very hard for American people, or whether it's a genuine desire to rearrange the pool of savings and investment and spending on a global basis. Earnings per share in India probably need to be in low double digits. You probably should be looking at 11, 12, 13. The problem is expectations are much higher than that. You're really looking at expectations of 16, 18%. So the way I look at India is a case of growing into growth, which is in essence a much better problem than trying to extricate yourself from the liquidity trap that, for example, China have found itself in. So China to me is a safe harbor during a storm, but otherwise it has a very intractable problem.
Well, just 7 minutes to the close of trade. And, before we move on, just wanted to pull up one crucial aspect. I've seen a good bounce from today's low, and the Nifty Bank has a lot to do with it. So if you just pull up a chart, you'll see that the Nifty Bank now is at its 20 DMA. This will be very, very encouraging. If we can close somewhere around here, the bulls will live to fight another day. And that's been a good recovery that we have seen. Last week as well, we couldn't get past the 20 DMA. But as you can see, that chart is telling you the close is going to be somewhere there. The other point is we've been talking about this market is net short, the FIs have been net short, and by the look of it, there is some unwinding. I don't know whether it's from the FI aspect, but otherwise there is some shorts that are getting covered out because the open interest is down by close to around 75,000 contracts or thereabouts. So that's why, in fact, we are seeing this bit of a bounce. Well, let's get in Sudeep Bandyopadhyay, who joins us on the show. Well, Sudeep, it's been a very, very wobbly market, and particularly for the broader markets, portfolios have got slammed. But at times like these, actually, you get good stocks at decent valuations. Could you name a couple of stocks that you believe have come to those levels?
Well, I think one stock I have been talking about, Nigel, for quite some time is Vedanta. And I still believe Vedanta is a good buy at current levels. Though it's not come down today, it's actually moved up a bit. The value unlocking opportunity is in front of us. They have their meetings scheduled one after the other now. And, in a couple of months, the companies will be separate and value unlocking possibility will be there. The other stock which has come down surprisingly, and I don't know why, is RateGain Technologies. Again, this is, one stock which I've been recommending and, liking for quite some time. Travel and tourism worldwide is booming. And, this correction, actually, I really don't understand why this correction happened. But whatever it may be, even if there are some, hidden negatives in the results or the conference call, which the company did, I would think that this is an excellent opportunity, to take the benefit of this fall and accumulate this stock. Third stock, again, I will repeat Reliance Industries. It has moved up a bit, but I think still a lot of possibility of it moving up significantly higher from current levels. But remember, all these are for slightly long-term investors. One doesn't know what's going to happen in the next 10, 15, 20 days because volatility is here to stay. The market was in an oversold zone, so bit of correction, bit of short covering was par for the course. But again, volatility will be back. Make no mistake, it will be back, and there will be further ups and downs in the market. But from a long-term investor's point of view, the three stocks I mentioned definitely worth buying.
Okay, all right, got it. Well, looking really good on the mid-cap screen now, about 0.5% up on that index. CG Power, GSK Pharma, Glenmark Pharma doing really well. Ajanta Pharma, actually, it's a great day for pharma, you'd have to say. Across the board, Piramal Pharma, look at that, 8%, 7% moves on the upside. Sudeep, it's good to have you with us. On pharma, what's your sense? I mean, I don't know if the stocks are just undoing some of the damage because there was a lot of fear around US tariffs and what happens, especially to a lot of these companies that might be exporting into the US. But what would you buy within the pharmaceutical space, if anything, now?
Well, I think one stock you just mentioned, Piramal Pharma, I think it's beautifully positioned. Remember, they have a very well-developed facility in US itself. So, even if there is a little bit of here and there in tariffs, I don't think these guys will be impacted significantly. Of course, the entire CDMO space is booming, and their complex hospital generics business also is doing well. Domestic bit also is doing well. Overall, I think Piramal Pharma, considering even after today's bit of up move, is definitely a good buy. I also continue to remain bullish on Mankind Pharma. They have about 95% of their business in India, so they're not affected one way or the other by these tariffs. Their acquisition of BSV was criticized by the market, but I believe long-term it's a significant positive. So, for a long-term point of view, Mankind continues to remain a good buy, according to me.
Any thoughts on Senco, which has come off quite very sharply? Sudeep, high. I mean, high was actually one shouldn't get anchored to the prices and where they've come off from, but for what it's worth, almost 800 to 330 today.
Well, Prashant, you mentioned absolutely correctly that we should not get ourselves anchored to the prices where it went. I'm a little skeptical on these regional, gold jewelry players. Whether it's PN Gadgil or Senco, they need to prove themselves on a pan-India basis to deserve the kind of multiples which a Titan or even Kalyan is getting today. So if I have to buy a jewelry company, I would rather stick to Titan. If I want to go for the second one, I'll go for Kalyan. I won't venture into these predominantly regional players at this stage. I think it's better to stay away. There's enough more volatility in the market.
Okay, all right, Sudeep. Give us a minute. We need to start winding down the day. Just got about 2 minutes left. And this has turned out to be a good session for the bulls after a long time because they have lived to fight another day, as they say. From deep cuts of over 1.5% in the morning, the screen is now positive, a 40 points gain coming through. So what has worked on the Nifty? Let's talk about the big movers on the upside. Adani Enterprises, Bajaj Finserv, IndusInd Bank, Adani Ports. So you can see that it's not really sectoral in nature, just sort of a different clutch of stocks moving higher. Shriram Finance has had a good day, Ultratech Cement. And then there are some PSU names like Coal India and ONGC that have had a pretty decent session as well. HDFC Bank is the big bank stock that has been fighting on the upside because some of the others were not that constructive. In fact, ICICI Bank is ending about 0.6% lower. Actually, on the lower side, to talk about the losers, apart from ICICI Bank, some tech names. Tech was weak today. TCS Infosys down. And Mahindra has seen a lot of profit taking today. 3.5% lower on that stock itself. But Prashant, I guess not a bad close at all, specifically for the mid caps, which are actually outdoing the large caps now.
Yeah, absolutely. And all these smaller pharma names, right? Glaxo, Piramal, Aarti, Jubilant Pharma, that is, Camlin Fine, decent kind of activity today. And of course, the ones we discussed quite a bit, Godfrey, Manapuram, Ashok Leyland, CG Power did not go back to the lows of close to 500, but did crack in the recent fall, but it's back just about 25 rupees away from the 600 rupee levels. Castrol is another one. Kirloskar Brothers is another one. So enough and more action in terms of what was up. But lots of accidents as well. Rate gain is Sudeep was talking about. Zentech is another one. Senco, K-Fintech, MTAR Tech, Utkarsh Small Finance Bank. So enough and more. But yeah, I mean, today, after a really long time, the weight of sort of gains, volume-led gains was, of course, it was advantage bulls. or some recoveries across the board. So it was good to see that. I think what we're going to do is we'll just wrap up things here, but we'll come back, and Sudeep, of course, is with us. We'll come back with markets forward. Surbi and I'll take you through that in just a bit from now.